Alright guys, in the trade already right now. I'm going to try to talk through it while I can. I'm going to go ahead and pull out one here.
Target filled.
So that's one target fill. That was about $300 for that one, or $150 for that one contract, and we'll see how much lower this thing can go. It's pushing pretty hard right now. It might retrace after it finds some support and then maybe continue down, but I have my stop in place. And we'll see if this thing can move down even more. So one contract left between $170 $180 right now. We'll see how much farther this thing can go. I'd say, you know, targeting right here. You could see a bounce here at the 42 if it doesn't, right away. The next one that might be down in the 20s, or even the low of there, the 34.21. So. But let me go ahead and, just for the purpose of the video, let me go ahead and get out on this contract here as well. Maybe see if we can push down to 40, 41 one more time. If it doesn't, it doesn't. It could retrace back up, and then we could find some resistance, and it might come back down. But so really quickly though, just to show you on the short time frame and longer time frame here, really all morning you weren't looking to buy, you were looking to sell, because we had that sell bias at the end of the day yesterday and all day this morning, right? So it never broke above this 34.90 here, as you can see, which was like the last peak right before it dropped down at the end of the day yesterday. So not the highs, but the last closest high, I guess you can say, before price started moving down. So we had that, and if I were to show you kind of what was going on this morning, so you had pretty erratic movement, price up and down as the market opened for the Globex session, and then we kind of just boxed in here, right? We just had your highs, lows, and then broke out of there, and you can see once it broke out of there, it touched the top of that and then stayed above here for quite a while, except for, you know, it was finding resistance and it just was not pushing down any further than that. And then we finally broke down into the that area, broke down below it. So all the buyers that were initiating here, that was expecting prices to move up, probably in a losing position. And you can see all we were waiting for was that retracement, which you see here on the market profile on this chart. If I were to draw it out a little bit more, see, it finally breaks down below low value area, which is in the green line, came back up for a retracement. You see the dot, and then you see sell orders coming down, which is when I took the trade. So again, always when I'm making videos while I'm in the middle of a live trade, which is always hard to kind of talk through it and try to manage it. I'm not the best at it. I just want to share this stuff with people out there so you guys have a sense of how this works. Sometimes it's live, sometimes it's after the fact. You know, I don't have a system in place yet, but the main thing is that you guys can learn from this, and really it's about being patient. So, you know, you could have taken that trade up here, right? But, you know, knowing, at least using this indicator here, seeing that there's you know, a sell bias here, you're not looking to buy, right? You're looking to sell. So you look at, where can I sell the market here? Well, obviously you're not going to sell as it moves up, right? Until the bias changes, which it didn't. It was still negative, and then finally, right, when you get on the short time frame, when it finally does break down below low value area, you know, that was your chance to kind of sell there. So that is the first trade that we took today. Nice, just 2 contracts. That was about a little over a 20 tick move, and it happened pretty fast. So you can see kind of retraced. Finally got that dot, and about 5-10 minutes after that, you know, it started to move down in about 10-15 minutes into that actual reaction. So again, you know, just looking at it, talking it through will kind of help you guys look for the stuff in the market on your own. Of course, you know, having an indicator is going to get you in the market at a better price and more accurately. You can execute better. But the main thing that I'm always making videos on to discuss is how to trade market profile and walk through kind of the psychology and the thought process of why you're in the trade. You're not just blatantly or just rudimentarily throwing yourself into a trade without actually having a solid trade idea or thesis behind why you made that trade. So that's always the idea here. I always try to explain using the indicator as far as execution, but really, it's a little bit easier to see the picture here, right, on the Thinkorswim chart, at least for me. And I can kind of draw in the little areas for you guys to show you, who was kind of battling on either side, right? The main thing here is just you just gotta be patient. So, the more patient you are in the markets, the more money you can make, and the less money you lose. Just from my experience and from what I've read from other traders and books on psychology. But so the next trade would be if this thing comes up to the low value area and we see another Fibonacci retracement, because we're probably going to measure from here to here. So let me see. Since that's our initial move, we'll look for a move from the highs to the low now. So it could come up anywhere, all the way up to the 3464, right, which is a 76% retracement. Ideally, because we have the low value area at 3456, we would like to see it between 50 and 62% maybe of that retracement. And if I were to, if you look at where that 62% is, right, and the 50% is, look where it lines up with where we just broke. So, we initially broke out of here, this little consolidation area, broke down, right, came up, and then broke through there. And look at the low right here when it started moving up, and look where it broke out, right? And look where the retracement is. The 50 to 62% retracement is at the bottom of that low, right, that we just broke through. So a lot of times this this system is all aligned and has confluence with each other. So in this case, if it does come up to this level, I would look to sell again and see this move continue to the downside. If it doesn't and it puts me out, I have the 15 tick stop, and you can see just based on the 20 tick move here, if I were to get in, let's say at a minimum at the 34.6, or at the maximum at 34.6, I mean, and 15 ticks above that would take me way above that 100% retracement, meaning if this move is supposed to continue going down, it shouldn't retrace all the way back up to that initial move, right? Because that's where the sellers were initiating this move. If it goes all the way back up there and there's a chance to go up to the other side, now sellers are in a losing position. So if they're really in control, it should only come up maybe halfway, 62, 76 at the most, and then continue going back down from there. So that's why when you enter here or here, you have that stop. You're giving it enough room for the market to, kind of figure itself out, and then for the sellers to continue moving this market back down. And that's just one way to look at it. All right. So with that said, I hope I can. You guys got something out of that, and I'll close out this video. I'm still managing this trade, as you can see. I do have a stop below here, but actually what I'm going to look for, it should break below here. If this thing is going to continue, and this is an initial move, and let me talk really quickly about Elliott wave, and I'm not going to go into the theory, but basically, markets move in waves according to the Elliott wave theory. So if you have a move, initial, you got your let's say you call this A. So now the move is going to the downside. A, you got your B, which is retracement. Then you got your C, which is a continuation, and then you might get a D, which is your last leg retracement, and then an E all the way down, or 1, 2, 3. You got 1, 2, 3, 4, and 5. So all your odd numbers, 1 is going to be in the direction of your move. Your even numbers are going to be your retracements. 2, 3 moving down, 4, and then we're looking for 5 to push us down even further from here. And what we would expect is at least another 20 to 15 tick move to the downside, just based on this move here. That's just one way to look at it. May not happen, and there's different ideas of what each leg should look like when they move down, but I could see that, because you got, if it moves down from here, let's say here at the 50, okay, which we just retrace back to. I don't see the Fibonacci retracement dots pulling up on here, but say that this is all it's going to pull back and actually start moving down from there. 50, 40, 30. Now look at where the support is on the chart here. We just came down to the lows here of yesterday during the live market, okay, and then we saw a bounce. Obviously there's some support there. Now let's look where that at. Where is that? 34.40ish. Let's go 30. Obviously some support here, right? That'll be the 30 and that'll be the 20, right? So support on both sides. So if this really does move down, it's my next leg down. Moving it down to 34.30, 34.20 is not. It wouldn't. It would actually make sense, right? Just based on the how these waves usually work. So usually you're looking for almost the same distance off of that second leg as well as the last leg. Some people say it's shorter, some people say it's longer, some people say it's the same. I would err on the safe side and say let's move around the same tick movement. So about a 20 tick move. Let's see, 20 tick move here, and we have time to walk this through while I'm talking to you right now. As you can see, I'm still in the trade, so I'm making my theory as I go, but I'm also looking at the charts and seeing if I'm right. So I'm like, all right, so if it does come up here and that's my retracement, didn't come up higher, doesn't always. That's why people who are against Fibonacci retracements are like, well, where do you get in? It doesn't always go up to 50, 62, whatever. Okay, sometimes it doesn't, but you got to catch the first move, which was right here, right? Once you get that, then the next leg, if you have a contract in, or if you want to get back in, you get in here. But if you're still a contract or two or whatever, how many you're scaling as you go down, you can leave one in and you can target your next your exits,
order filled,
the way we're just talking about here. So all right, that was another trade. Okay, and I'm using this on other markets as well as the ES, and same thing on the euro. Okay, so I got the other trades going on as well, but same thing, retracements, and then a continuation into that direction, and that's basically what we're trying to do every day in the market, guys. All right, we'll close out the video. Hope you guys got something out of that. Like I said, sorry I'm a little bit long-winded today, but wanted to pack it with some extra information, and we'll see you again if I make another trade today or on Monday, since it's Friday here already. Alright guys, talk to you soon. Bye.